After last week's CPI print, the market went absolutely nuts, and this week was no exception. Riz and I are going to talk about it. Good evening, my fellow Riz Elite members. This is Chris with Riz International, and this is your weekly market recap webinar. If you are watching us on the YouTube channel, please make sure you click that like and subscribe button down below. Leave a comment to the pinned question down below. And this week's question, we'll discuss that a little bit later in the webinar, but of course you can just scroll down there and click on that and answer it right now. But we are joined by Riz again this week. Riz, how are you doing this evening?
Doing good, Chris. Yourself?
Doing fantastic. It's a great day here, and it has been an absolutely wild week in the market. We started the week on Monday right above our support level here at this, right around 3640, basically, and we kind of pushed up, had it looked like we're going to make type of rally, and then we started to dip back down, and then Friday we just went absolutely nuts. Huge green candle on Friday. Riz, what is going on with this market?
Yeah, complete kangaroo, absolute kangaroo. I mean, if you're Australian, you're familiar with kangaroos, you're probably having a great time. But for the rest of us, we are out of our depths in regards to this price action. It's bonkers. It's brutal. It's very difficult to come out and say, okay, well, we're gonna see this level or we're gonna see that level. Although I've done a pretty good job. I mean, not to pat myself on the back too much, but I've done a pretty good job with kind of giving us areas where we can see the market end up in a reasonable amount of time. But it doesn't help when this week we saw three red bearish days in a row, and then I think that was Thursday, Wednesday, and Tuesday, and then Friday massive pump. Now the question I got asked. Why? For someone who wasn't monitoring markets from open to close or even before open, it's because we had one of the Fed uh, members. I can't exactly remember who it was. Maybe it might be Daly. And they were like, okay, yeah, Fed Daly. So they were like, yeah, we can potentially slow down on the rate or potentially effectively do what's known as the pivot, where the Fed essentially said, okay, we've done a good amount of hikes. Now we want to give it a little bit of time. And what does that mean? The market's thinking that, that will be a good thing because, we know that usually, not always, usually higher interest rates mean, of course, a little bit more of a damper on markets. Why? Because without going too into depth, otherwise this webinar is going to go multiple hours. Anytime you have higher interest rates, increases borrowing costs, increased borrowing costs impacts pretty much every large corporation, even more so those that obviously borrow capital, which 90+% of companies do. So that increases their borrowing costs. Borrowing costs that are higher increase, essentially decrease, sorry, their net profits if they're making any. And as a result, that pressures companies' earnings, profits, so on and so forth, quarter after quarter. And that's why it's in a nutshell, again, that's not the most precise and in-depth answer, but that's the most overarching, simplistic answer I can give you at the moment. And that's put some negative pressure on earnings for companies. And we know the stock market is ultimately, aside from all the technicals and the indicators and price action and volume and supply and demand and all these things, it comes down to one thing: earnings. You need to have a company that essentially earns something or gives something back to shareholders, and that's what net earnings is called, right? Net profits, if you want to call it that. And yeah, sure, there's companies that don't have a profit yet, but there's always that hope. That's why people invest. They invest for the future, not for today, right? Not for necessarily tomorrow either. So that's one thing where markets are always interested in interest rates, even more so this year, because, well, guess what? If you have lower interest rates, you're essentially boosting the economy, you're boosting corporations. And that's what we saw occur in 2020 very rapidly, very significantly. the moment the pandemic hit. All the central banks across the world, and it's not just the U.S. A lot of people think, oh, inflation. It's not a inflation isn't just a U.S. problem. So it's not, it's not the president, it's not Biden, it's not Trump specifically who people can just point and at. That's my biggest pet peeve, where people just automatically defer to whoever is the president, like as if they're fucking sitting there, like, trading futures themselves, or like in charge of the money printer, or they technically they're not. They're the Federal Reserve specifically is an independent uh, uh, branch of government, and they're specifically in charge of monetary policy, and they're supposed to be independent. As far as people saying no, they're not that independent. Well, I think you can make the case, uh, either way. Um, and for any president, I don't think it's just this. No sitting president wants a recession. No sitting president wants, austerity or financial slowdown. Okay, it's just simple fact. So when the Fed does act, they have their mandate. They're answerable to not the president. They're answerable to each other, and I would hope so answerable to us, at least those that are American. That's ultimately something that people need to be aware of. But it unfortunately isn't the case. A lot of people don't know that. So getting back to markets, it's been very volatile day to day. For those that are trading intraday, we've seen the market, intraday develop some trends. Um, as long as you're going flat the day of, you should be okay. But for swing trading, for carrying, it can be a mess, because you'll have one day that's down big, and then you think we're gonna retrace lower, and then another day you have a complete uh, bullish engulfing pattern candle, where it just redoes the entire loss from the previous day and then some, and then you're like, okay, well, are we gonna go back up to 3750, 3800, and then what happens? You got some, you know, 3 bearish days in a row. And then you're like, okay, well, okay, that I was wrong about that. Maybe we're gonna go to 3600 sooner than later. And then you get this big push up on Friday. And then you're like at 3750. You're like, oh fuck, maybe we're going to 3800 after all. So it's so frustrating. And I wish people, and I'm not looking for sympathy points. Again, I'm very fortunate, but I wish people sat back, maybe not for a minute, but maybe 5 seconds, and thought, geez, this is fucking difficult. I can't imagine what it must be like to, put your skin and put your neck on line. Obviously, put your money on the line, and try and guide, not only guide yourself and your own capital, but others as well. It's not an easy feat. I'm not looking for sympathy or brownie points here. Um, I'm just telling you guys what it is. It's really fucking difficult, and as a result, it ends up being frustrating too. But this is not something that's foreign to me. It's very much so, the last couple of years, but it's not foreign to me. This has happened before. We've seen topsy-turvy markets. We didn't used to call it kangaroo market back then, but um, that's a very accurate name. It, you know, lately.
The Fed had hinted about possibly doing a 100 basis point hike later this year. Riz, what do you think are the chances that they actually do that? Are they going to stick to the 75 basis points?
Yeah, good question. So for those that maybe missed the last week's webinar, um, I said November 2nd is the next Fed rate decision. That's a Wednesday, obviously, and that lies, just a little over 2 weeks from now. And based on the dot plot, based on the metrics, we are in pretty much solidified for a 75 basis point hike. There was talk, especially easing into last week, that they could do a jumbo, like 1%. But with Daly and all the little tidbits they like to spread around, which honestly should be fucking illegal, mind my French, but they shouldn't be allowed to keep yapping about with their low views. Like, you know what? Talk to us on Fed decision day. Give us the minutes. Have the press conference, and then fuck right off. Okay, because there's no other way for me to say it nicely. It's this kind of talking that it gives the a volatile market even more volatility that's not warranted. It's not needed. It's not necessary. Okay. So to Chris, to answer your question, 75 basis point hike is 95 to 99% certain. I don't want to say guaranteed, because nothing's guaranteed in life besides taxes and death. Uh, But yeah, we were expecting a 75 basis point. There was some mumblings about a 1% potentially, but after what Daly came out and said, unless she's off the rocker, I don't know. Um, I think 1% is kind of off the table now.
That's good to know. We'll have to see how much faith we can put in that Fed folk there. But let's see how the market is breaking down here. Looks like more of the same. Obviously, utilities has come down below the zero line here so far, but hanging tough right here with healthcare. Financials getting a little bit of a perk up here, going along with the market as well as tech, but real estate stays down in the dumpster. It's currently the worst performing sector that we're monitoring here, while energy continues to just steamroll and is up over 50% at this point. Riz, what are your thoughts here for this breakdown? I mean, we're coming up towards the end of the year here fairly soon. Where do you think we're going to end up?
A couple of key things interesting here. Financials, as you mentioned, I mentioned in Elite that financials were breaking out. I think it was start of the week or maybe end of last week. I said, financials are breaking out. It's pretty interesting. And, we've seen that continue. Obviously, the markets are running as well. But what's even more interesting to me is how tech has now was up until a couple of weeks ago was the sort of underperformer, and that's kind of changed. It's not by much, but that has at least changed a little bit with real estate sector being the most underperforming sector. And last but not least, utilities coming back down below the zero line in October is also, or end of September, is also something that tells us that perhaps there is more of an appetite now heading into Q4, where institutions and investors are maybe looking to take on more risk. And when that happens, we see decrease in utilities and an increase in tech. So notice how, I'm not saying that's going to continue to happen, but notice how that's occurring. Something to think about. Something interesting. How, we've seen a breakdown in utilities, which are usually seen as sort of, a little bit more safety, lower volatility, and of course, the opposite's happening, where that asset class, that sector's not asset class, but that sector is kind of being sold off a bit, and it's not coincidental that we're seeing tech kind of pick up from the lows.
Speaking of asset classes, let's go ahead and take a look at those right now. Now, let's see. Oil mounted a very nice recovery here. I think we had that last week, and bit of a retracement here, sitting right on our resistance here, right around 80, or support and resistance, I should say, right around this 85.50 area. While gold continues kind of its downtrend at this point. We're really looking down on gold at the moment, though. Pretty big day on Friday, right along with the market. But let's talk more about oil, Riz, because I know this is your thing. Of course, we had the big OPEC Plus announcement that everybody's saying is, they cut production when they actually cut quotas. And we really haven't seen this uptick in oil yet, even though they're saying that, I mean, I'm listening to the news. Everybody's saying that, it's going to be terrible in Europe this winter. Why is oil just kind of sitting down here?
Yeah, so we have terrible, energy policy to thank for what's happening in Europe and I think across the world. Um, but that's a different story. With oil kind of just settling here again, obviously it's price, supply, and demand. We haven't seen, I think the market's kind of waiting. They're waiting to see if OPEC does an actual type of cut, even if it's a little bit, and if that's going to coincide with a slowdown in demand like we usually see during the winter months. So the market's kind of waiting. I would say you can kind of see it's hovering around the 85 level still, uh, kind of directionless for now. I don't personally see any kind of directional move sticking out to me just yet. So as a result, no trade on that for now. But gold, as we touched on last week, I said Diwali for one of the largest gold consumers countries is India. So that's a big celebration that's coming up, and yeah, gold went up on Friday along with the market, but nonetheless, it's still in a downtrend, like you said, with that 1630 area being support. Um, and I'm not a buyer at these levels still, personally. And I think Even the fact that we know the market knows that this holiday is coming up, they're expecting a lot of purchases of gold. They're still, you know, it's not impacting the price as a on the commodities market. So just something to interesting to keep an eye on.
Speaking of something that's trading sideways, that would be Bitcoin right now. Really nothing to talk about here, honestly. After coming down and tapping this 18,000 area, Bitcoin has just been kind of sitting here right around 19,000, not doing anything. Really, nothing remarkable to talk about here. We already talked about that. Nothing happened when we came through this descending resistance line. So let's go ahead and take that off. But yeah, really nothing too exciting to talk about here on Bitcoin. It's just kind of everybody's sitting and waiting to see what happens.
Yeah, significant consolidation, just hard locked around 19,000. Very interesting to see, and good for the diehard crypto and those that are holding crypto for the long term. It's good because it's holding this area. At least it's not tanking. It's not a free fall, so that's good. And of course, this happens to also be the area that was previous all-time highs, back in 2017, end of 2017. So that's also very interesting that we're still in this uh, kind of given back, 4 or 5 years of gains, right? And I guess that's not a glitch. It's literally part. It's a feature of crypto. Where you have this immense volatility and boom and bust cycles.
Yeah, definitely. We're getting to our point in the webinar where I want to go ahead and open up the floor to questions. And while everybody's typing, I actually had quite a few of our members send us questions. And the first one comes from Jeffrey, and we've got 5 tickers to go through here. But he said he wouldn't be able to make it tonight. I hope you're having a good night, Jeff, wherever you may be. But he wanted to talk specifically about holding some securities through earnings this week. Obviously, Riz, you mentioned that everything's coming down to earnings. It's a big week in earnings. There are a lot of different big name companies that are going to report this week, and we've got a handful of them here that he is currently holding and wasn't sure whether he should continue to hold or what a strategy would be dealing with earnings coming up. And the first one is one that we have traded quite a bit before, and that would be Intel. Intel looking like it's getting a little bit of a boost here pre-earnings. Now, he didn't give me any of his entries, so I can't say where he's at or where he's in on these at. But Intel looking kind of beat down here with everything going on. Riz, what's your thoughts on holding through earnings on this one?
Yeah, if carrying through earnings, I think we've seen it always usually kind of gap down on earnings. Usually, not always, but usually. I think the fact that it's kind of picking up pre-earnings, that's a good sign. Of course, I don't know. No one knows what's going to happen with their earnings results, as Chris is perfectly well done on the circling the gap downs on earnings days, post earnings. So yeah, even though they have good earnings, they can maybe drop because of expectations. They decrease their guidance and all that kind of stuff. So that's constitutes why the stock drops. Now, getting in on this, I think it's a good setup for a potential long.
Yep.
For someone who's already in, yeah, I would ride this out. I would ride this out through earnings for now. And it sounds ironic. Well, Riz, you just said, it usually drops post earnings. Well, just because it's happened, 2, 3 times in the past before, it doesn't always happen. Didn't happen, one of the times back in May. Uh, it did go, a little bit up the next day, but ultimately, yeah, there is a history of it gapping down. Doesn't mean it's going to happen every time. So for someone who's already in, yeah, I would continue. There's no point taking a loss just in case or I'm assuming this loss, but there's no point getting out just because, it could gap down. It could gap up too, right? I mean, it's a little bit rare for this, but
Yeah.
it could happen. So that's my personal take on that.
Fair enough. Another one is a favorite of yours, and that would be Alphabet, aka Google. Yeah, I mean, looks like we've kind of found a base here around 95, and we're starting to kind of push up into earnings. Let's see, when do they report? Looks
Yeah.
like after close on the 25th.
Yep. Yep. I love it. I love this company.
Yep.
I love this company. In fact, I don't want to play my hand, but I'm feeling a little bit frisky.
Mm.
Maybe throw in a few 100,000 in this week, perhaps. Let's see. I'll let people guess, and then the actual decision will be for elite members. But yes, that kind of tells you how much I like the company. It doesn't mean it can't go lower. Obviously, we know earnings are coming up. It'll be a big dice roll, as earnings always are. But I have the obviously have the capital, the ability to, ride through whatever the storm, whether it's this year, next year, so on and so forth. And I like the company. It's a powerhouse. It's a powerhouse of a company. Has had fantastic management, continues to do so. Uh, yeah, we're in a little bit of a rough patch with ad spending and kind of what's occurring on a macro level with the economy, not just the U.S. economy, the global economy. Um, but other than that, it's a fantastic company, and it's honestly significantly undervalued by pretty much every metric.
Yeah, I have to agree with you on that one. This looks like a very good, really good spot, honestly. Now, another one that I know is not your favorite, that would be Shopify.
Yeah.
Shopify looks like it just got hammered here this year entirely. Just beat down from where it was before in the hundreds, now down in the 30s.
Yeah. What's
I'm
that drop as a percentage, Chris?
Yeah,
Ruler.
let's see. Let's check
We
that.
always like to bust out the ruler.
Absolutely. That's what she
Ah,
said.
brutal.
83%.
Yeah. Yeah. Well, this is a lesson, right? In humility and Shopify is a Canadian company, so I'm aware of them of the management, um, and it's a humbling year for them, as it should be, because they were all fun and games. They were all, oh yeah, fuck, we're so great. We're changing the world, and we're gonna take on Amazon. You guys remember that talk of
Oh, yeah.
Shopify taking on Amazon and being a competitor to Amazon? Well,
See how that
um,
went, didn't we?
it's ridiculous. But now, with that said, is it a penny stock? Is it a bottom of the barrel stock? No, I think at this level, it's at least from a technical standpoint, it wouldn't fault someone for considering an entry at this point. The only obviously the kind of the spanner in the throws a spanner in the mix is that there's earnings coming up, and that could go anyway. But apart from that, maybe if someone doesn't have a position, just wait out that catalyst. Yeah, it could rally, but do you really want to take that chance in this market for this company? No, I think you should wait. I think it's definitely in a good standpoint, maybe a starter position, but you have to use your chips wisely. You have to you have to know what you're doing. You have to have the patience, and you have to know what you're trading. This is not a Google. This is not a Microsoft. This is not a uh, Amazon even. So that's something you have to consider.
Well, it's funny you mentioned Microsoft because that was the next one on his list. Microsoft looks like it's getting a nice little push here going into earnings. Let's see. We report again after close on the 25th.
No, that doesn't seem right.
Isn't? Maybe
No,
they got it
because
wrong on here. It has
yeah,
happened
no, that's
before.
wrong. That doesn't seem right. I don't think Microsoft's doing it on Tuesday. This Tuesday, which is what 20 today. Tuesday is the 25th
Yeah,
after
so it was
close.
25th after close. So it is right.
Oh, okay, that is the 25th.
Yep.
Oh, sorry, I saw the wrong date. My apologies. Yeah,
No worries.
25th. Correct. Correct. Sorry about that, guys. A little bit off. Gotta refresh my eyes here. 25th, or 26th, whichever. It says 25th on the thing. But either way, yes, I agree. Nice little push there, looking very strong. Again, one of my top favorite companies. And you know what? Like I said, it's one of those companies that you can hold. Is not a surprise. It's not a new thesis on my part. It's something I really liked. Whether it's 240, whether it's 220, whether it's 250, I think it's a great company. So long as you have the ability to carry. Remember, trying to get in the bottom of these companies, it's very difficult, very very difficult. So you want to approach these kind of companies as buy, hold, carry, earnings or not. Right. That's my view on this.
All right, and then the last one from Jeff's list is Meta, aka the old Facebook. Now, I know we were talking about this in our private chat, Riz, that Facebook has really been losing pretty decent amount of users, and they're not getting newer ones. And obviously, not much has really come of the metaverse yet, at least in my opinion. Riz, what are your thoughts on Meta right now?
Yeah, metaverse is like this sinking pit where you go in, you're like, oh, it's even lower than I thought. So that's the metaverse in a nutshell right now, where you kind of get a kind of Nintendo Wii type of graphics, or even worse. For what exactly? It's kind of a farce right now. It's a shame, but who knows? Maybe 10 years later, Mark Zuckerberg's the one laughing and has the last laugh, right? Uh, so who knows? But for now, yeah, it's a dud. It's a cash drain. Uh, Not that it matters too much, because Facebook has a significant war chest of cash already, no debts. One of the few companies with no debts. Uh, so as you can see, the market's brutal. It's even then it's punishing a company like Facebook because of decrease in growth, decrease in users, and of course, these companies live or die by those metrics. And with this coming up with the earnings, if someone has a position, I wouldn't sell just because earnings is coming. But if they're looking to take a position, yeah, earnings is like I've said. I feel like I'm on a recorder here, but it is a toss up. I would maybe perhaps wait till earnings. We've seen Facebook not have the best earnings, especially the last quarter wasn't the greatest, but the market absorbed it well. Uh, but who knows what's going to happen this time? For someone who's already in, don't don't panic sell if your thesis is still in play and you have the long term view. But for someone who's looking to get in, I don't know. We know this thing moves. I mean, we've always asked ourselves, oh my God, 150 is it's at a great price, from a multiple standpoint, from fundamental standpoint, even from a technical standpoint at 154. But then it just goes lower, right? So we don't want to just look back and a month from now and be like, oh, I bought it at around 125, 130, and oh, it's at $100 right now. So what's low can go lower, no matter how much cash they have on hand, no matter how great management is, or what industry they're in.
Yeah, absolutely. You always have to remember that just because, fundamentals look great doesn't necessarily mean that the stock price is always going to go up. All right, now we got one more question that I got sent via PM, and then we'll take a look at the chat. It's from Woody. He says, if possible, of course it's possible, can we take a look at Netflix during the webinar? Let me get to his question here after I pull the thing up.
Mm-hmm.
It says, I like it on the long side. Still more gap to fill and blew past the 200 simple moving average on Friday. You're absolutely right about that, Woody. If markets rally next week, one to keep an eye on. Yeah, Netflix looks like it's pushing up here. I mean, especially after they announced that price increase. Riz, what are your thoughts on Netflix?
Yeah, this is something I've been looking forward to, and I've said, the what they're doing is they're adding the tier. They're adding the ad tier, which is honestly the only choice they had. They had to do it because they've been increasing prices over the last couple of years, and people are fed up with that. So they need to have a cheaper option, especially with the Disneys and the HBO Maxes and all that kind of stuff. So it was the only choice. Now they're doing, obviously, or at least from the start of next year, they're going to start cracking down on the massive amount of password sharing, and then maybe they're going to allow someone to pay a couple bucks, $4 or whatever, and then add another user on. Um, I'm not too sure about that policy, but overall, it's working. They're doing well. They had a great you know earnings with surprise positive increase in subscribers, which they weren't expecting. So that's good. The market reacted very nicely to that. Great move. And even before that, we could see that as the market was pulling back the last month, Netflix had a good amount of relative strength. It was just holding the 225 area, right, until post earnings, and it just gapped up to around 290. So yeah, very good. A lot of good relative strength. I think it can. I think if the market continues to push higher, this thing can definitely fill that gap to 335 area.
Awesome. Thank you for all those questions that were sent to me via PM. Now, Orlando here in the chat has a question. He says, what are our thoughts on the market testing 38 or 3,900 this week?
Yep. Yep. Good question. Definitely looking like we could see 3,800, 3,900. A little bit too soon to say, honestly. I mean, if we get a rip your face off kind of continuation, sure, like we saw back in July, Yeah, but I don't want to assume that we're going to see that again, right? We do have, as soon as we start November, we have the Fed decision date. That's going to be a big catalyst. That who knows. We also have a lot of earnings this week and next week. Uh, that's also going to matter. How the major companies do, how they provide guidance is going to make a difference. We've seen, um, one of the larger players, like depending on what they say, depending on how they do, can dampen or kind of juice the market higher. So we have to wait for that. None of us can you know tell beforehand. But 3,800 does look pretty reasonable at this point. I was of the mind, at the start of the week that we see 3,600, but clearly that didn't work out, especially with Friday's, you know, roid injection from Daly. So an absolute disgrace. But again, I'm a little bit salty because I got caught out on the other side of that Daly uh, uh, jibber jabber. So it is what it is. This is the clusterfuck we have to deal with in the market, and it's completely fine. You don't get to 15 years of doing this at the age of 31. It's going to be 16 next year, and not having seen all this before. It's not easy, but hey, it is what it is. There's no excuses. There's no uh, you know, sitting around in the corner and crying just because the trade went against us, or you got the decision wrong. That's what it is. You got to own it, and you just got to be aware that manage risk, manage position sizing, be agile. It just kind of stings a bit, when you have one Fed fuck talking one day, and then you have another one talking on a random day, and then you have another one at lunchtime chiming in what they ate for lunch, and another one, what they did in the bathroom. It's just nonsensical. That's what I have a problem with. Um, but yeah, 3,800 seems pretty likely.
It's comical. It's like, well, guys, I had a ham sandwich today. Market tanks. He, but it feels that
And
way.
I
I
brought in
don't
the frog
disagree with
voice
you.
today. I don't know if you can change it to tell a little bit of a difference in my voice today. Um, it's a little bit, I don't know if you can tell, but I don't know. I brought in a kind of a more mellow down voice. Maybe it comes through, maybe it doesn't. Who knows?
It's chill Riz tonight on recap. Yas has a couple of us or one to look at here. MRK is at all-time highs. Ooh, boy, there she goes. Good old Merck. What are your thoughts on Merck, Riz?
Yeah, I mean, it's a fantastic company. Really nice. None of the COVID booster vaccine type of stuff involved for the most part. Um, and yeah, very strong company, very good company. I'm surprised it's at these levels. Am I going and buying it? No, at these levels. But the fact that it's here is very surprising. But in a way, not surprising also because it's a very great company and it's in the right industry. It's an industry that is always going to be around. It's defensive, and it helps that their product pipeline has done well. So that's boosted it. You can see why it's running up. Nice gaps up this month as well. But earnings are coming. Earnings are coming, and earnings are forever the uh, uh, you know question mark. So what do I think about it? Fantastic company. Am I a buyer at these levels? No, personally.
Yeah, all-time highs are always a big question mark when you're getting there. Whether you bust through or not, obviously we're approaching being overbought at this point. Of course, that's just RSI, but just a little data point to keep an eye on. And then, of course, as Riz mentioned, earnings. Dylan wants us to take a look at Apple. Or no, I think you meant AAPL. There we go.
Mm-hmm. Mm-hmm. Yeah.
Yeah, it looks like Apple's on a little bit of an uptrend here, but it looks like we got earnings coming up on the 27th after close, so that'll be a big one.
Yeah. This is a nice push up again alongside the market. Great company. The only kind of negative that we can say from an Apple product standpoint is they just recently announced a decrease in iPhone 14 uh, Pro and Pro Plus production. So they had anticipated, initially before release, after the press conference, but before the release, uh, there was anticipation that this one's going to be strong. They're going to need to up the production, and obviously that didn't materialize. So that's kind of like a double whammy where you increase expectations and then you cut. that's, that hurts even more, as opposed to not saying anything and not hyping that up and not anticipating that. Um, so that's the kind of negative thing. But as you can see, it kind of weighed on the market. There is one of those days where it had a really bad candle when it, a day when it was announced, but not enough to keep the stock down. Uh, that's a good thing. The markets absorbed that, markets priced that in for the most part. Uh, Again, another solid company. Do I like it as much as the Googles and the Microsofts of the world? It's definitely up there, just not enough. So if I had to pick between, you know, Microsoft, Google, and Apple, I would pick Google and Microsoft first. Um, Google first, Microsoft second, and then out of those three, Apple would be third. So make of that what you will. I think it's a good entry point for long term. If you're trying to trade it, you're honestly, when it comes to swing trading in this market environment, it more likely than not, it all comes down to the market move. So it's no coincidence that we saw a really strong day on Apple, with the market being up, 2.3, 2.4% that day. Same thing will apply whether it's, Amazon or whether it's semiconductor. So that's the thing, right? A lot of these stocks are moving in tandem with the market. So kind of trying to, say, oh, okay, well, this is how this specific stock's going to do. It's kind of moot because guess what? If it's a large cap, it's going to do pretty much what many of these, what the broader market's doing.
All right, Nick has two fan favorites of ours to take a look at, and then I think we'll go ahead and call it an evening after that. First one's going to be AMD, just kind of languishing down here. Of course, concerns about chips is going to weigh down on AMD. Riz, what are your thoughts on the petulant
Yeah.
stepchild of elite membership?
I like this company a lot.
Of course.
The semiconductor space is in a bit of a doldrum. One, because obviously slowing down economy. We've had obviously the pullback in markets, and the third thing being that the current Biden administration has essentially stopped the export and development of specific chipsets and being sent to China. And I actually get that because China, and I'm not trying to be political here or come across as like as someone who's has a problem with a specific country, but there's no denying that China has been a big uh, player in IP, sort of IP theft. And I know maybe CCP is watching this and they're gonna be really fucking pissed off, but I don't care. But ultimately, for those of us that are sensible, that keep an open mind, and that have been around, know that China has been a pretty big stealer of U.S. IP, and there's no other way I can say it. There's no other way I can politically correct say it. There's no other way. They have been stealing IP, and it's not new. It's not just in semiconductors, and of course, there's some national security issues with that. When you have a country that is imagine doing all the grunt work and all the investments are made and all the people that are working, and specifically the US I'm talking about, and then you sell products and you ship them there, and you have offices in those countries, and then all of a sudden you have bad actors in that country essentially there to undermine what you've developed with your very, very difficult, expensive and painstaking R&D process, and then it just kind of picks it up. They just pick it up. So that sucks, right? That sucks. So I get that. I get that, and that's kind of I don't want to call it a ban, but that kind of limitation of selling to certain types of chipsets has negatively impacted demand as well. So I mentioned three things: the slowing down economy, overall market, and of course this kind of chip uh, kind of limitation of export is dampened, and we've seen that with guidance from not only AMD but also Nvidia, uh, saying, you know what, we suspect a decrease in guidance. We suspect less purchases, specifically of PC chipsets. Right, PC chipset demand is down. It's not also uh, a surprise that because the hype around crypto and the languishing price of crypto has also decreased the hype and demand for different processors, different GPUs, CPUs, because people may not be mining anymore. So that's something to consider as well, right?
And the last one Nick wanted us to take a look at was SQ, and he's got a little bit more of a specific question now. He says he has his average is right around 100. Ow. That's rough. And maybe 90 if you include all of his covered calls, but he can't write them now since it's so low. Is there hope for block, aka square, here in the future?
Yeah. This one's gonna be like a turnaround type of play. You're gonna have to carry like till the economy's like or the market's made a roundabout turn, right? So if you're okay with that, sure. If you're not okay with waiting, could be 6 months, could be a year, maybe a little bit longer. Then you kind of have your answer, and your answer is contingent on the fact that you can use the money for something else, right? And we're coming to the end of the year, and if you're in the U.S., you can harvest, some losses, and offset any capital gains if there are any. So something to think about, right? Tax loss harvesting, something I've mentioned in one of the tax videos as well on the channel. So don't forget to check that out as well. But yeah, I mean, my condolences. Everyone at some point has kind of been in this situation where it's a company that's already dropped significantly. Like Chris, do the percentage with the ruler on this one, right? From where it was at what 260, 280. This one's going to be even more fucked. Oh, just very close. Okay, 80, not that bad. Right? Not as bad as 82 or 83% of what was it? What was it? What was the other company? Shopify.
Oh, yeah, it was Shopify. Yep.
Shopify. Yep. Yep. So, yeah, I mean, pretty much in the same boat, right? Again, Square is not profitable yet. Has the growth there, and they're also very much tied to the broader economy. Like the Square is about payment processor for small businesses, so on and so forth. Guess what? Slower economy, maybe small businesses shut down. All of a sudden, less demand for Square products and services, right? So you can see why the market's been very brutal on these kinds of companies, especially those that don't have many profits to speak of, or any in this case. So if you are okay with carrying for a year and plus, sure. Your thesis is still in play. You like the company, like what they do, sure. If you are miserable carrying it, you don't have any hope with it, you're afraid of taking the loss, well, you kind of have your answer.
Awesome insight as always. I want to thank, of course, all of our elite members for coming out to be here with us live. Thank you for all of the awesome questions, both here in chat and, of course, PM to us. And it's going to be a busy week with earnings, so buckle your safety belts, guys. We've got a lot going on this week. And, of course, all of our elite members are going to be alerted to that live, and that it pays to be part of Elite. That's really all I can say. So, Riz, thanks for being out here again and sharing all of your deep insights with us. Really appreciate it. And we'll see you all in the market on Monday.